This might be one of the most important moves for XRP since its creation. A new protocol just launched that could finally bridge XRP into real DeFi, not just hype, but structured yield with institutional backing and insurance protection. If you've ever wondered what it would take for XRP to become more than a payments coin, this is it. Today, I'm breaking down how the Firelight protocol just opened the door for XRP staking through the Flare network, why it matters, and how it could reshape the way liquidity and risk are handled across the entire DeFi ecosystem. Firelight Finance has officially launched a new XRP staking system built on the Flare network. It introduces a new token called stXRP, a liquid representation of XRP that can move freely across DeFi, while being backed by a DeFi insurance model. Here's how it works. You bridge your XRP into the Flare ecosystem through the FAssets system. Once bridged, your XRP becomes FXRP, and you can deposit that into Firelight. In return, you receive stXRP, a one-to-one token that represents your staked XRP. Right now, that's phase 1 of the rollout. You can already move stXRP across DeFi, trade it, lend it, use it in liquidity pools, but the rewards haven't started yet. Those come in phase 2, planned for early 2026, when Firelight activates its insurance-backed reward system. Here's what makes this revolutionary. Most staking systems rely on inflation or token emissions. Firelight flips that model entirely. Instead of printing new tokens to pay rewards, Firelight ties rewards to real economic activity, specifically, insurance premiums paid by DeFi protocols that want coverage. That means protocols can buy protection against hacks, exploits, or smart contract failures, and the fees they pay fund staking rewards for XRP holders. It's a DeFi model designed for sustainability and security, not endless emissions. The company behind this, Firelight Finance, is incubated by Centaura, a merger between Into the Block and Trident Digital, both well known for their institutional analytics and liquidity work. They're supported by the Flare network, which provides the infrastructure, and yes, both Centaura and Flare have strong ties to Ripple. This isn't random DeFi experimentation. It's a serious, risk-modeled approach to make XRP yield-bearing, while giving DeFi protocols the missing piece they've always needed: reliable, insurance-backed protection. Connor Sullivan, Firelight's chief strategy officer, formerly from Fireblocks, explained why this system exists. He said the biggest flaw in early restaking projects like Eigenlayer wasn't the tech, it was the cost of capital. In other words, every dollar locked in restaking was expensive, and most protocols couldn't sustain that kind of capital pressure. Firelight changes the equation by focusing on low-cost assets like XRP and building a business model around insurance demand instead of pure yield farming. It's one of the first DeFi systems where both sides actually win. Protocols get coverage for catastrophic events. XRP holders earn yield tied to real revenue, not artificial incentives. But there's a catch. It only works if protocols choose to buy that coverage. So, phase 1 is about onboarding capital. Phase 2, launching in 2026, depends on whether DeFi projects integrate Firelight's insurance layer into their risk framework. For now, Firelight is rewarding early participants with Firelight points, an on-chain scoring system that tracks your engagement before the official reward phase begins. Think of it like an early contribution program. Not yield farming, but participation credits that may later convert to governance or reward multipliers. And here's the key difference. These points are transparent. They're tied to real vault participation and on-chain activity, not random airdrops or engagement farming. This points first, yield later model might sound familiar. It's what early Ethereum restaking protocols tried, but Firelight is applying it with stricter risk management, insurance reserves, and professional underwriting. It's not about hype, it's about trust, sustainability, and long-term capital flow. And this whole thing actually connects back to a much bigger theme: liquidity evolution. It's the same reason I've been following Unic, the pre-market OTC platform that's transforming how liquidity forms before tokens even go live. Unic lets users buy and sell pre-TGE assets directly, giving traders the same kind of early access and price discovery that institutions have, without middlemen. Firelight and Unic are solving the same problem from different sides. Firelight creates safe liquidity for institutions. Unic creates open liquidity for retail. Both point to the same future, a DeFi system that finally matures beyond speculation. You might wonder, why XRP? Why not ETH or SOL? Because XRP is one of the few assets with low capital cost, deep liquidity, and institutional backing. It's not heavily used for speculative yield farming, which makes it perfect for an insurance-based system where stability matters. Also, XRP has a massive community and circulation base, with over 7 million wallets and only a fraction actively using DeFi. That means there's untapped potential for on-chain yield if Firelight succeeds. If DeFi adoption grows, XRP could become not just a bridge asset between banks, but a yield asset across chains. Firelight's insurance-based yield model won't go live until 2026, but make no mistake, this launch marks the beginning of XRP's DeFi era. If major protocols integrate Firelight's cover model, it could do for XRP what EigenLayer did for ETH, except with lower risk and broader institutional compatibility. We're witnessing the early foundation of risk-priced liquidity, not hype-priced liquidity. And if XRP starts earning yield through real DeFi mechanics, that opens the door to on-chain credit markets, decentralized treasuries, and even tokenized bonds, all backed by insurance, not speculation. In short, XRP just got a purpose in DeFi, and in a market starving for credible yield, that might be all it needs to reprice. When you talk to fund managers, family offices, or treasury desks, there's one phrase you'll always hear. We'd love to use DeFi, but we can't afford the risk. That's not an emotional reaction. It's structural. Institutions are bound by compliance frameworks that demand risk mitigation before exposure. That's why protocols like Firelight could be the missing piece, because insurance isn't just protection, it's permission. Here's what I mean. For an institutional investor to allocate to DeFi, they need 3 pillars. Liquidity. Capital must move efficiently. Yield. Returns must justify exposure. Coverage. Losses must be quantifiable and insurable. DeFi already solved the first 2, with liquidity pools and on-chain lending, but never the third. Firelight finally closes that gap. By linking XRP staking rewards to real insurance demand, the protocol creates a revenue layer that's both sustainable and compliant-friendly. Because when coverage is on-chain, transparent, and auditable, regulators view it less as wild crypto and more as structured finance. And that's the bigger play here. If Firelight's model works, it could bring institutional liquidity back into DeFi safely, not through yield farming or leverage, but through risk-priced coverage. This is where XRP could become the bridge, not just between currencies, but between traditional finance and decentralized infrastructure. Insurance comes first. Liquidity follows. That's how XRP transforms from a speculative token into a yield-bearing system-critical asset, one that earns because it protects. And once again, this mirrors what we're seeing with Unic's pre-market OTC, where Firelight's staking model connects institutional liquidity to DeFi protocols. Unic connects user capital to early token markets. Both remove bottlenecks, reduce middlemen, and reward transparency. That's what I love about this cycle. The next bull run isn't just about speculation. It's about infrastructure and liquidity engineering, from XRP's DeFi bridge to Unic's early access systems. If you've been following me for a while, you know I've been saying this. The real crypto revolution isn't just about price. It's about how capital moves and protects itself. Firelight's launch could be one of those early signals that the next era of DeFi is starting. Quietly, but powerfully. Stay sharp, stay curious, and don't fall for fake links or impersonators. The real tool only asks for your XRP amount, never your wallet or seed phrase. I'm WealthyWise, and as always, understand the system before it understands you.